Sure.
Yeah.
They're calling to say, we're ready now.
Yeah.
So,
Yes.
So if I was looking to purchase a house in a few years and I needed like a mortgage counselor, would I have to would I pay you to handle my
No,
finances?
no, we do not get paid until the closing day. There's a lot of people I work with for a very long time before I ever make a dime. And that's just part of all of our business.
yes.
None of us get
every
paid
one of
until the
us.
closing day. It's just the way it goes.
And I actually just called my credit union and spoke with a mortgage officer
Mhm.
person. So do your rates vary? Like
Yes.
we could shop you around too, right?
Sure, you could. What you should do, I believe, is you should at least call 2, if not 3 people, and compare all their rates, compare all the programs, because for you, there may be 4 different ways for you to go.
Do you know what the average closing cost for Georgia or for Kennesaw?
Typically, if you take 2.25% of the purchase price, you'll get pretty close as to how that works.
What are closing costs? What does that mean?
What does it mean?
Yeah.
Well, somebody like me generally gets paid a 1% origination, and that can be worked into the interest rate, or you can pay it, whatever you choose to do. There are attorney fees, there are title fees, help me guys,
That's it.
recording,
Appraisal.
intangible taxes,
Appraisal.
every property has to be appraised.
Title
That's
insurance.
required. Title
Pulling your
work.
credit report is part of it.
Yeah.
There's a cost from the bureaus.
Yeah, there's all kinds of, you're paying everybody. You're paying a flood cert fee to make sure your property's not in a flood zone, which is like $8, but it is.
It's part of the cost.
Like, okay, as like for our school, it's growing, so it's going to continue to grow. So it's because we're in the college area, are we going to see an increase over $100,000 for a closing price or the starting price for a house?
Yes, we really are. You won't be able to find anything under 100 again, now that we are on the upswing. When we were in the depressed period, which really was about 6 years, I also saw it at the very end of 2006. And in 27 years, I have never seen anything like this. So I am just beaming today as there is growth happening again, because it changes everything for our whole economy in the United States. It does.
And
I
those
mean,
under $100,000 properties were really on the backs of people that lost a lot.
yes.
You know, is really how that happened.
Yeah. So not under 100.
For like college communities, like Kennesaw, for example, is it more expensive because the college is here, and or versus going somewhere like Putnam County where it's not a college like town?
I have always looked at it not even in terms of college town. I have always looked at every single county. The closer it is to get into Atlanta, which is the main hub for work, the more expensive it is to live. The further out you go, because it takes you so long to get back in, the cheaper it can actually be. So that's what I've always geared it. It really wasn't toward college town or anything like that. It's really because most of the flow of traffic will head into Atlanta for work.
And a $100,000 property right now, or for example, the 115 one we're doing, I have it in my head, that girl is putting 3.5% down. She's doing an FHA mortgage, which is a whole different animal, and you know, we could talk about that individually if you ever wanted to. But her payment, including taxes, insurance, and she also has to pay what's called PMI insurance, total, I think, is about $750.
So you know how easily you can do that with a roommate? I mean, for real, you can buy a house, have a roommate for a year or two while you're just starting out in your new positions in life.
So then what if you don't have a down payment? I mean, if the market's about to take off and now is a good time to buy, but we don't have any money and we're just now graduating college, so we're maybe just getting that decent job, what advice do you have for us to take advantage?
That's a tough one. I mean, that is, you know, save till you get the money.
And
You
You
can
have-
get a gift.
You can get a gift
from
if
your
you have-
parent or relative. It has to be a blood relative.
Yep.
they can give you a gift as in like cash that's not taxable or something?
Well, it can't be cash. It has, I mean, I have to know where the money came from. Yeah, don't ever just keep cash and put it under your mattress and then put it in a bank.
Because we're doing one of those right now
Yeah,
too.
yeah, please don't ever
I
do
know.
that. That's a big deal because, and that goes back to the drug trade. That's where that comes from, is so many people had drug money. And that's where all that craziness started in the 70s, and that is absolutely not allowed. So, I also wanted to say just really quick, and then I want to hear your question, but I want to say this before I forget. My company is expanding greatly right now. Huge. And I know you guys are mostly journalism kids, and that's great. But if you have any friends that you think may have any interest whatsoever in the mortgage industry, we just hired, I think, between 30 and 40 kids in the last year.
What do you
And-
pay?
Well, we'd have to talk about that later. But it's a salary plus commission type position. But it's just out there. I'll give you a business card, and if anybody wants to look at our website, you know,
What is
it's
your
just-
company?
It's Primary Capital Mortgage.
Do you have cards?
I do. But I think it's a good starter job if anybody is, you know, like I said, and they are very, very big on hiring new college graduates. Very good. We do a lot of out of Kennesaw, out of Georgia, different places like that.
Okay, I have a couple questions. On the credit score, so like what's the current interest on, say, a 700 credit score? And what do you predict it to be in, say, 2 years or 3 years?
Predict the interest rate?
Yes.
Oh.
What's the current interest rate for, say, a 700
Well,
credit score?
current, the best credit score, the credit score I really want to see is a 740, okay, to give you the best interest rate, okay? If you go below 740, then you start having what's called hits to the interest rate, okay?
Okay.
So at 740 today is probably 4.5.
And what is it if you have a below 740?
If you're at 700, you're probably going to be looking at 4.625, just an eighth higher.
Oh,
would be
not
my
bad,
guess.
not bad.
Okay.
And then it all depends on how much money you're putting down as well.
Okay, and where do you see that trending to in, say, 2 years, 3 years?
You know, how many years
If
have
she
I
could
been
do
saying
that,
the rates
she
are
would
going to?
retire.
Yeah, yeah.
But what have you seen it
Slow
change
growth
from a
and
year
very
to
slow
now?
uptick this year.
Very slow. I've been in this business for 15 years. The highest I've ever seen is 8. The lowest I ever saw was 3.25. The history in the last,
Year.
well, the last year,
A percent
we had
jump?
no, we had a couple, probably between 4 and 5. Yeah, you're right. I
About
would
a
say in the
1%
last year
jump.
we've probably seen about 1% jump. It depends. I mean, you know, if they find out this plane that crashed was a bomb, it could very well change our interest rates here. You know, just any kind of weird thing that happens in the economy, sometimes we'll see little jumps. But when I say it could change it, I'm talking 1/8% up or down,
Okay.
depending on what happens.
And my second question was about the construction and the lumber costs, and I heard you say that lumber costs was going up. What is fueling that?
Construction, building,
So
actually
is the
people that are.
Supply and demand, so is this more demand?
Exactly.
Okay.
That's exactly what
Transportation
you.
costs too, though, right?
And it's
Getting-
what caused your interest rates to go up a lot. It's just, it's all fueled by the more demand that there is, the more that the rates will tend to spike. And construction, the cost of lumber is going up
Okay,
because people have saved a lot of money during this recession period.
okay.
So it's been good.
The
And
cost
fi-
of fuel to get the lumber there. I mean, there's so many
And
things.
finally, this is a question about, during this recession, there's a lot of mortgage fraud. And I just heard an article this morning that said that they're seeing an uptake in mortgage fraud. What is that about?
Well, and this is just my opinion, but they are starting to loosen up on some of the guidelines. And I think as they loosen up on the guidelines,
What kind of guidelines, like what?
well, there's all kinds of different guidelines when you get a mortgage. And like back whenever they used to do the 100% down, no income, no asset loans.
Right.
I mean, there would be hairdressers would come to us and say, oh, yeah, I can make $100,000 a year. Okay, we'll say you make $100,000 a year, you know, crazy
Okay.
stuff like that. And then they'll
Buy a
sell
big
us.
house then, huh?
Yeah, buy a big house, yeah. And then, so as they loosen those things back up,
Who is they? Who's loosening them up?
banks, lenders, Fannie, Freddie.
And do they know what Fannie Freddie is? Good gosh,
Oh,
that's
yeah,
a
do you
big
know what
term
Fan-
you
do
just
you know
threw
what
out
Fannie
there.
Freddie is?
No, tell them.
Okay. You may need to help me with that. Fannie Mae and Freddie Mac are two technically private entities.
No, not now.
Yeah, that's true,
They're
right?
GSEs,
That's
they're
true.
government-sponsored
That's true.
enterprises, and
Yeah.
we bailed them out
Right,
2 years
right.
ago.
Right.
To the tune of what, $180 billion or something like
billion.
that?
Did they
Yeah.
pay it back?
Our government?
Do you
They
want
have
to know
paid-
how they're paying it back?
They have paid it back, and they're now paying us because they're making a profit, and they're putting money into the coffers now.
Yeah, but do you know how they're paying it back? They're paying it back by GSE fees that are attached to interest rates.
Sure.
That all of you are paying for. So, so
Which
the
raises-
interest
So
rates.
payback
Which
is
raises
always
the cost
us,
of
isn't
loans,
it?
right?
Yeah,
Some
yeah.
guidelines are coming from the banks, Fannie and Freddie.
Which is
Can you give me-
government. Yeah.
Well, it's kind of back in, and I don't want to get political at all, but it kind of goes back to that period of time in the 80s when they thought everybody should be able to buy a house. Everybody should buy a house. And they really loosened up a lot of guidelines, and that, in my opinion, again, what got us into a lot of this trouble.
So darn, that statement, it's the American dream to own a house, it really wasn't true.
They'd let anybody buy
I
a
know.
house. They just said, yeah, I make $500,000, and then they couldn't pay it when the adjustable rate mortgage went up, and that's why everybody had to lose their house.
Oh, there were
Right.
so many factors.
Right.
Yeah.
So that's a lot of it. But, I mean, buying a house is a great thing to do, but be prepared and know what you're doing, and don't just, jump into doing it. And none of us would allow you to do that either, I don't think. Yes?
I have two questions. Is there like a guideline or a list that I guess we can find online that takes us through the steps of building our credit and getting ready to purchase a home?
I'm sure there is, but call somebody that knows what they're doing to help you through it.
Like a counselor?
Yeah, call me. I'll give you a card.
Yeah,
I mean,
sure.
I'll be happy to talk you through it.
Okay.
Yeah,
And then my
yeah,
next
it-
question- oh, go ahead.
I mean, I'm sure there are tons of things out there you can do, but it's such a moving target
Okay.
that I would talk to somebody that really knows what they're doing with it.
Okay. And my next question is 403B, similar to 401K.
Uh-huh.
How good is that in helping you, trying to purchase a home? Because my employer told me that having a 401K or 403B can, help you with trying to close the price and trying to purchase a home and things like that. But I'm not really,
You're talking FHA.
yes.
Well, a 403K loan, what that is if the house needs rehab, if it needs some rehabilitation work.
No, he's talking about a
What
savings,
is-
he's
I'm
talking
sorry.
about a tax-deferred savings
Oh,
account.
I'm sorry.
Yeah, 203K is what you
Yeah,
were
yeah, yeah,
thinking
yeah, I'm
for
sorry, I'm
construction
sorry.
houses.
Yeah, I can't speak to that. Can
No,
you?
that's okay, but he's talking about savings.
Yeah,
Okay.
retirement savings and stuff like that.
Okay, so you
Does
can,
that help?
you can. How does that help him to purchase a house?
How does it help you to purchase a house?
If you have your retirement money?
If you have,
savings?
if you have retirement money, depending on what the guidelines are to withdraw that money, you can use some of that money as a down
Or
payment.
possibly
Yes.
borrow
Yeah, you can borrow against it as a down
it
payment.
to use it for a
Yes.
down payment.
And pretty
Possibly.
low interest rate too, to borrow against it
Don't know.
usually? Don't know?
Don't
Okay.
know.
Yeah, well, you're borrowing against yourself.
Yeah.
So it usually depends on the actual guidelines of that, whatever your vehicle is that you're borrowing from.
I have another question. My husband is an independent contractor, and I may or may not go the freelance route myself after graduating. So what kind of advice do you have for people who don't have necessarily like full-time jobs? If you're self-employed or if you're an entrepreneur,
Which is all of us.
you can't.
We are self-employed people.
So how do you prove your income?
If you're self-employed, you have to have been filing your income taxes, have to have 2 years on record of that self-employment, and you have to be very careful how much you deduct, because that's the game. You want to write off everything you possibly can, right? Well, if it comes down and you write everything off and it says you make $7,000, that's all I have to qualify you with. So that is a whole nother animal where you need to work with the CPA on that.
And that's not you, that's a CPA?
Yeah, well, just to figure
have
out
to
what's
do
best
it.
for your taxes. Yeah, and that was another part of the whole meltdown is self-employed people would say, they make such and such and,
Yeah, $100,000 and you
Yeah.
have 7,000 that the government knows about.
and maybe they made
at the end of it all.
$100,000, but they wrote off 93,000.
Mhm.
So a lender's gonna say, well, you don't really make 100,000, you make 7,000.
Well, that's considered fraud if it goes through, right?
Well, sure, yeah. Absolutely. But like,
You mean if
like-
the loan goes through?
Or if somebody who says that they're somebody who's self-employed and they're living in, you know, a huge $1 million home, and then they're saying that they only make X amount on their taxes and stuff, they get into trouble. Just like, I don't know if you keep up with the news, but the Real Housewife of New Jersey couple, you know, they're displaying on TV, they're living in this like $1 million house. They have Range Rovers, all this nice stuff. The inside of their house is fully granite, but then what they were claiming on their taxes, they were like, hang on, if this is what their taxes are, how are they affording this? So now they're in huge trouble, and they're
Right.
both about to go to jail over it.
Right. Yeah. I mean, there's a lot of legitimate things you can write off on your taxes, but I'm sure there's a lot of very illegal things you can write off on your taxes as well. So that would be CPA. We'll hang them for that one.
So tell me, when does everybody graduate? When is this class over? Okay, you're almost finished.
I have one more question. When the market was really bad, did you notice an increase of people who weren't able to sell their houses, so then they were trying to rent them out?
Yeah. There are a lot of rentals. There were a lot of people that did what they call short sales. And short sale is pretend you owed the bank $150, but all the market would bear as far as an appraisal is $90,000. You sold it for $90, and you asked the bank to forgive $60,000. So those people got to walk away if you put clauses in the contract that said you never had to repay that money to the banks. So the banks, thus the reason that Jim was just talking about, there's this big bailout that just happened because everybody was short. They didn't have enough. So short sales, and then actual ones that went into foreclosure.
So are there no more short sales now?
Hardly any. There's
They're
a
almost
few.
going away now.
There's a few, but not
I
many.
was hoping to buy one of those.
Yeah, they're hard to come by, and now we're seeing, at the end of last year and the beginning of this year, multiple offers on everything. So I would literally sell a house to one client 4 times before they finally got one, that they didn't have to overbid tremendously for. So even if it was $90,000, let's say, as that example, people are paying $120,000 to have it. So appraisers are finding this hard factor now where prices have been like this, but now they're increasing. So appraisers are having a hard time doing their jobs too because of this increase that's happening again.
I know, like when the economy took a downturn, I know a few people who did like reverse mortgages. Like, can you just explain that process to me and how it works?
Okay. A reverse mortgage, and I know about this much about them, because we don't do them. A reverse mortgage, but I have to study it for my testing and stuff. I believe you have to be 60 or 65 in order to even do a reverse mortgage. And the way it works is instead of you paying the bank each month, they pay you. And they're giving you, but you're paying a lot of interest to do that. But they pay you. So like if you have a $200,000, if you have to have your house paid off, basically, or close to it in order to do that. And then they pay you each month. But I know there's some issues that when one or the other spouse dies, they've had some problems with the banks wanting to call those mortgages due, and I know there's been a lot of problems recently on that. What about HARP loans? Have I heard that term in the news? HARP? HARP?
What's that?
HARP?
HARP or DU Refi Plus or anything like that. What that is, that's a government program that, like people that she was talking about with the short sale situation, like I'm doing one right now where the couple, they paid $250,000, now their house is worth $165,000. They've owned their house for 9 years, so they only owe $163,000. So they owe $163,000, the house is worth $165,000. But by the time they do their payoff and different things, they're basically at 100%. You can't refinance a 100% loan. So what the HARP loan allows you to do is you can actually go up to 150% of the value and be able to refinance, which I think is a wonderful thing because it helps these people that have 7%. There are still people out there that have 7% loans because so many people could not refinance during all this time because their houses were so upside down. So those people can refinance.
And what's the interest rates on those?
About the same. as normal conventional.
So we're at 4.5% today?
Depending on, their situation.
They pay closing costs and all that all
Yeah,
over
yeah.
again.
Oh, yeah. You always have to pay that. The only thing you don't have to pay twice is owner's title coverage, because you should already have it. But that's it.
Which is a mere few $100 or less.
Yeah.
Well, compared-
Any questions? Anything else?
Can I have a business card?
Yeah.
Yeah, I wanna.
Business cards.
Did we overwhelm you?
Tell us again about that parent gift thing.
You want me to call your dad?
My mom bought the house in Town Lake with cash, so if she
Okay.
wanted to help me, she could.
Yes.
Okay. The way it works
She can.
is if a parent would like to gift you the money, and it can be any amount at this stage. They've just changed that. So if you're doing, for example, an FHA loan and you need 3.5% down, which would be $3,500 on $100,000, the parent,
3,500.
3,500
$3,500.
on 100.
3.5% of the purchase price.
3.5% of the purchase price. So your parent can gift you the money, but the way that works is I have a gift letter they have to sign, and then they have to show me, not you, but they have to show me their bank statement, proving that they had the $3,500 in their bank account. Then it gets transferred into your bank account.
Seems like a lot of paper, but it's because of fraud, which is what she goes back to. I have to have proof, I have to have proof, I have to have
But
proof.
that was the down payment, so like, how come I have it in my head that you need like $20,000 to buy a $150,000 house?
I don't know, you don't. And then Colleen can explain to you real quickly how you get the seller to pay closing costs.
Absolutely. So
Yes,
when
please.
you're coming in where you feel cash poor, it's easier to just pay closer to the full price of the home value and ask the seller to pay all these thousands upon thousands of dollars of expenses on your behalf. Even myself as a real estate agent, I have done that 3 times in the past where I have paid the price that they were asking, because I would rather, even if I had the $35,000 or $5,000 worth of closing costs or $6,000, if it's a $300,000 house, let's just say as an example, that's $9,000 in closing costs. I'd rather keep my cash. I would rather them pay it, because let's just say that I'm paying $9,000 more for the house because I'm asking them to pay for that. $9,000 times 4.5% interest rate, 9 times 4 is 36, about $40 a month it makes in my monthly payment, and I can hang on to my $9,000.
Or use your
So-
$9,000 as a down payment and not get a gift.
Yes.
So there's different ways
So you,
of doing it.
I say you want the seller to pay those costs on your behalf, but just be willing to pay the seller more of what they're asking for the house, and then you can have these other financial concessions.
The only catalyst on that is the house has to appraise for whatever you, whatever the purchase
purchasing it.
price.
For.
So, come on, question. So, in today's market, like, who is in the driver's seat, the buyer or the seller?
Right now, it's the seller.
It is. It
Our
is.
inventory is so low. The residential inventory is very low. If you got a house in the right location and it's in really good shape, you're in the driver's seat.
Yep. And that switched fast, didn't it? It was the buyer for years.
Some
For
of these
several
houses
years.
are having how many offers?
Yeah,
5 to
3,
6.
4, 5,
Yeah.
depends on what area of town.
And is that,
Oh, sorry, go ahead.
I was just gonna say, there's that many people looking to buy now, because it seems, I mean, I guess it switched fast, because now people are working again, they have money, and they're,
And the interest rates are still so low.
how long do you
So-
think that'll hold on with the low interest rate?
I've been saying for 8 years, interest rates are gonna go up, they're gonna go up. They did a little bit, but
They'll go up a little bit this year,
Yeah.
don't you think,
I
Laura?
think they will.
I do
Yeah.
I
too.
think they
A
will.
little bit, but not a lot.
And it's
what
still
drives
low.
that?
The economy, I mean, it's just, anything can change and make
growth.
rates go up. But for so long, you probably heard about how the government was buying mortgage-backed securities. Did you hear that on TV? You know, the government's buying how many $1 million a month in mortgage-backed securities? Well, when they were buying those mortgage-backed securities, that was to hold the rates down. That was the whole purpose of that. Well, eventually, they gotta stop buying those mortgage-backed securities, and they'll start going back up.
When you have the multiple bids on a house, is that when you get into the situation where people are actually overbidding the cost of the house?
Yes.
But then how does that work if you said that
Appraisal.
you can't pay past what the house is appraised for? I mean, isn't someone gonna set the price of their house what it's appraised for?
If I am your agent in a situation like that, and we're gonna be a multiple offer situation, I will know whether that house can appraise, and you'll be able to do that. Strongly, I'll know, just because I know the value and what is happening as prices are increasing, and we'll be able to tell pretty
And
much.
if somebody really wanted that house, what your suggestion would be is to go ahead and offer that appraised value, which is gonna be the top amount.
Yeah. Yes,
But-
right now you need to, because it'll be higher in 2 more months. Because we are seeing an increase. It is happening on a big scale this year.
But we're nowhere near back to where we were.
Oh, no.
So
And you
these-
can always put an appraisal contingency clause in your offer too. So,
Which says it has to appraise, like pretend you paid 125 for it, and now she just did the loan and they got the appraisal back and it's only worth 120. Now that's a negotiation factor. First of all, you can walk away, or the seller can reduce that house down to 120. And you say, okay, then I'll take it still. So there's some good choices for everybody to back out of the situation. Or the seller can go, I can't afford to sell it, because now that means I might have to come to closing with money and I don't have any money to get out of my house.
Or you can say, I love this house and I'm gonna pay that extra $5,000
Out
out
of
of my
cash.
pocket.
There you go.
Yeah.
Can't be a loan, part of the loan.
And what are some other things that you see in appraisal contingency clauses that will help the seller? Or the buyer, not the seller, the buyer. So I'm buying, because you can basically write different things into the contract as contingency clauses. So I'm just wondering.
Well,
if
there's
anything
generally
that you
3.
see.
And correct me if I'm
That you
wrong.
see.
There's an appraisal contingency, a financing contingency is generally, I like to see 21 to 24 days, which
Okay.
gives me time to get people completely approved.
Okay.
And then there's the due diligence, which is their time to do the inspection.
Yes,
and
you
all
can
of
have a
that.
house inspection done, and if you don't like what you
Okay.
saw from the inspection, you can just walk away, or you can ask the seller to repair those items that need to be fixed.
Okay, because you usually have to put some good faith money, right? So,
You'll put up earnest money as you write a contract, but that money just sits at our company or a builder's escrow account.
Right.
And if you don't go forward on the house, that money is just given back to you.
okay.
It will be deposited into an account, and then that's used as part of your down payment when you close. And if you don't close, that money would be refunded to you.
So is it refunded if you have something in the contingency clause, or just that's the law or practice?
No, you have, go ahead.
No,
gotta
no,
be
no,
in the
go ahead.
contract.
Yes.
It's in the
It
contract.
it does
is.
have to be.
Contracts really are very
Yeah.
protective too,
Okay.
just
In
so
the
you know.
contract. Yeah.
Contracts really protect you, the buyer, and they protect the seller very well. They're written by attorneys, all these contracts here in Georgia. So they're very protective of everybody so that there are outs for everyone.
Can I have your website address?
Yeah. I don't know it.
You don't know your website either?
They keep changing it.
She did, she
We-
just
we were
went through
just
2
We
things.
were just repurchased and they seriously keep changing it on us.
You said you're all self-employed people as well?
Oh, yes.
Oh, sure.
We are.
And I want to pay as little tax money as I can, okay? But I don't have to buy a
There'll be no
house.
houses for you.
I don't have to buy a
We're just gonna
house.
put these up for anybody that just feels like that they would like those. I mean, even if you just have questions, please do not feel like, oh, I don't
I
want to
do.
take up his or her
I
time.
didn't bring a bunch of cards with me because I didn't.
Thank you.
You're welcome.
Too many W's.
Oh, you can see what he's doing?
Yeah.
Oh, up there.
Yeah, it's up on the screen.
Yeah, tell them just
There's a
stop
lot of
that.
W's.
Yeah.
So if you had, like, say you had $4,000 cash and a credit score of 650, would it be out of the realm of possibility to be approved for a house?
No. It's not out of the realm. You will have a little bit higher interest rate due to that 650.
But it seems like that would almost be a decent trade-off to get one now before the home values go up and everything, right?
And the interest rates go up.
And the interest rates.
I do. I think it'd be a good trade-off.
But that's
But I
reasonable,
would,
like,
but in that scenario, I would have that person speak to a lender and see what they could do to improve that. To
but
get a better
how
interest
long
rate.
would you want that to take?
Well, it depends on what, it depends on what the problems are.
Depends on the
Yeah.
details.
Yep, and it's all details,
The devil is in the
absolutely.
details.
The
The
devil.
key is to pick someone who's competent and trustworthy and experienced so that you get good guidance.
Yeah. I mean, that could be fixed in 30 days and it could be fixed in a year. Depends.
And that's my husband's credit. His is worse, but he's the one with the money. I mean, well, my credit score is actually a lot better. It's up to like 750, I
Yeah.
think.
But you're not
Okay.
employed,
But I don't
right?
have any income
Right.
to show.
The other good thing about college students is you do not have to be employed for any particular length of time in order to buy your first home. As
Oh.
long as you can provide a transcript from the college you went to.
Oh.
Now she's
So-
talking.
Well,
Why
yeah,
didn't she say
why
this in the
didn't you
beginning?
hear
Listen,
that?
everybody's ears are up now. I
That's
can
the
have this
headline.
job for
Yeah.
3 weeks.
Now that is a guideline today.
For
Okay.
current, you have to be a current college student or even after you graduate?
Well, you have to have a job, you know, but once you have a job, I don't have to have a 6-month history of that job.
Nice.
As long as I've got some good transcripts. And they don't have to be, when I say good transcripts, it has nothing to do with grades.
And when you
Just
say
has to be-
job, like what if we're self-employed?
Yeah, you're
Again.
I'm sorry.
You can untape that.
That doesn't work, right? That doesn't work.
So I need somebody
Yes.
out now. And does that, I mean, like, what if you have a part-time job versus a full-time job?
Oh, part-time jobs are bad.
Okay.
Not good.
Gotta be full-time.
Unless you have a full-time and a part-time job, I can use the income on the part-time job if you've been doing it for 2 years.
Okay. Yeah, we need to talk.
Thank you, everybody. Good luck to you. I mean, you guys are gonna have some interesting careers.
Yep.
Journalism is gonna be interesting.
If we get jobs.
You will, you will, you will, or you wouldn't be doing this.
That's right.
By the way, we're just wowed by your university. And we were here a couple of
Oh,
years
yeah.
ago, and this place is amazing. It
Yeah,
is
that's what the clinic
absolutely
counter.
amazing.
College is
Very
a clinic
impressed.
counter.
Very impressed.
She goes, does that mean you guys get facials and everything before you come to school?
Thank you so very much for.
Thank you, guys.
My pleasure.
This was very
Y'all have a good day.
Who has visited it?
Yeah, really. Who all goes to the clinic?
Nobody.